Can you guys hear me? I'm starting a few minutes early just because I'm sitting here. Figure we hang out for a few minutes and then actually kick off in like 3 minutes or so. Let's see. Looks like I'm alive. Let me know if you guys are able to hear. Um, it looks like it's coming through on my end. The Wi-Fi here is shockingly pretty good. We're staying at another pretty cool spot. There's a couple places. Let me show you. That we were walking around earlier, and this was pretty neat. So I put this in the Discord before, but for those that are wondering, this was right before I walked in to this, and it's really difficult to see, but essentially we're out in the middle of Lake Louise, walking in towards the hotel, which is gorgeous. Super, super cool spot. So right now we're all settled in for a little bit. We have dinner reservations in like 90 minutes. So game plan is to walk through the markets as per usual and see what's going on. So I hope everybody had an awesome week. Definitely a little bit of a downtick today. I had a couple really short-term positions on in futures just because I was really out of cell service for the majority of the day, but there were a couple opportunities that I was stoked to be able to get involved just because of the overall velocity, which was pretty good. So that is mostly what went down today. I'm taking a look at my trade log really quick just to see if there's anything specific that I want to talk about. We can talk about some of the covered strangle positions. UPRO and T triple Qs, probably both of those bear at least talking about. And then in the meantime, let me grab our workbook. And what I want to do is figure out what we want to talk about for our focus topic today, since this is typically a beginners oriented live stream. So let me grab this. And then I think what I am going to do now that I'm going to try to do live streams daily is I want to actually set up like an advanced live stream day, because I have one specific for beginners, but I don't have one specific for advanced. And I think that would be kind of fun to offer people that might be a little further along on their learning path a chance to take a look at some more complex stuff. So especially now that Lauren's in here, we know that we can really get into the heavy stuff. That would be, I think, I mean, it's probably exactly what's on the docket, isn't it? So I have to figure out exactly when I want to do it, but I do want to slot that in. I think that would be really fun. All right, cool. So I got us at 16:30 Pacific. Let's get started. All right. I have not gone through the news today. If you guys know from a news perspective what went on today or anything that I should take a look at, I actually would love to hear that. And it's because from a news perspective, I didn't catch a whole lot. I was watching futures, and there was two things about futures movement today that I want to emphasize. So let's take a look. I'm just poking through the news from bar chart first. And way down by sell-off in Mag 7. Okay. The NVIDIA position definitely felt that, so that makes sense. Low volumes, thin trading conditions due to holiday trading this week, leading to exaggerated moves in stocks. Is that accurate? Because volume actually looked kind of heavy to me today. Is that actually correct? Let me move this out of the way. Yeah, volume is actually kind of heavy today. So now this is a great example, though, on when we're looking at news sources like this, you cannot take it at its word. You still have to apply like a thinking person's mental model to it, because the article that we're reading is saying that because it was a holiday trading week that volume was light, and on a relative basis it definitely was on Christmas Eve and Christmas Day, but today volume looks normal. So volume came in at 65 mil, and then a 20-day average is 48.8 mil. So it's not actually from that. Like, that's not a good explanation as far as I'm concerned with why the rotation happened. So we'll have to take a look at some of the internals to get to the bottom of what actually sourced the rotation. But thought that was an interesting side note, at least to share with you all. Lauren says that's not accurate for the stocks I was watching. Yeah, exactly. It doesn't look like it to me either. Joe said hated today's movement, was trying to get out of Walmart calls. I didn't take a look at Walmart. We could take a peek at that. I'm actually interested. So, but yeah, from an index perspective, it's just not the case. So let's see what else. Trade deficit. Wow. That's bad. I didn't realize the trade deficit was quite that bad. November trade deficit widened to negative 102.9 billion from 98 billion in October, larger than expected of 101.2. Negative development for Q4 GDP and bearish for stocks. Yeah. So this is actually kind of a big deal. So that's interesting. A little heavy. Wholesale inventories, I don't really care. Asian stock market, I don't really care that much. Okay, here we go. This is what we wanted to get to. Benian, is that right? Benian Wolk says, do you have any book recommendations for options trading / TNA? Yeah, it would be options as a strategic investment. That would be the go-to. And then for TA, man, that's such a great question because when people ask that, I think it's one of the instances where people are asking a question that I think it's an example where somebody's asking a question, but really the answer they want is another question, and they just don't know to ask the other question. So the reason why I say that is because when most people say like a book about TA, if you think about TA, technical analysis, there's the basics, which literally can be learned from Investopedia, right? Like what candles are representations of supply and demand. What are for me at least, the primary functions of technical analysis always come back to support or supply and demand. Always. So there's the very very basics element of stuff, but then there's a whole other level to it that can go into an actual technical analysis methodology, which is a bit different. Let me find, I'm pretty sure I have a video that talks a little bit about technical analysis. Yeah, here we go. I have a 2-part series for you, which might be helpful. Hopefully it is. And then I can give you some book recommendations as well. So that's the first video. Here's the second video. The second video is a little bit more prac app. And so for options trading, the answer to that is always the same because it's very easy. The first book is Options as a Strategic Investment by Lawrence McMillan. And I'm not affiliated with him in any way. I actually tried to connect with him to see if he would come on the podcast, and he turned it down. So it's actually quite the opposite. But I still have tons of respect for him, and I think that the book that he did is really good. Now, one of the things I have to remind people, though, is when you go through and you read books like that, everything in there is not gospel. So there are fundamental components that will be what they are, right? So when they're talking about things like the Greeks and volatility, like that is what it is. But then when it comes to approach and methodology, that's not gospel. It's going to be based on what you want. So let me grab actually. I'm just grabbing like a Google search for it so you can see it. So this is the book. Let me see if they have one from like his actual website. Let's see what this is. Yeah, this looks okay. So for options as a strategic investment, the way to think about this is that this is a fundamental book. This is designed to be a reference book. I think it really is designed to be read end to end eventually, but not necessarily all at once. That's kind of heavy. it's more of a textbook style. So I think this would be the one-stop shop is the starting point. Then from here, you can get into anything from Natenberg or anything by Ewan Sinclair. Those would be the next two paths I would take. Now, again, both of those will have very specific opinions. Like, for example, one of the things that Ewan talks about that I don't fully subscribe to personally is Ewan is very focused on volatility and trying to optimize for volatility, which I understand, I respect. It works really well for him. But you don't necessarily need to be super scared of that. You can trade long options, be long vol, and be okay, provided that there's a system. But Ewan tends to shy away from that because options tend to be overpriced. So there's like those small nuances that you'll find. Larry, who's Lawrence McMillan, Larry is more willing to buy options, which I align more with. And then Ewan is less aligned with buying options, although he will buy them, to be clear. I'm not saying that he will never buy them or talks about never buying them, but it's just not necessarily his go-to. And I'm a little more in the middle, I think. So there's that. Now, for technical analysis, I actually think it's a tough question because there's technical analysis that applies to big things and then small things. And here's what I mean. And if I were to give you a succinct answer, let me do that first. I'll give you a succinct answer up front, and then I'll give you the nuance because I think it's a really interesting conversation. I'm just grabbing a link here. I'm trying to see if he has it from his website. I don't see it. Let's see what this one says. I don't really use Goodreads, this book. So this would be the technical analysis book I would refer to more people. And it's because it talks about what I consider to be the heart and soul of technical analysis, spotting supply and demand changes. Now, the book is very specific to a methodology, and the methodology that they use is called CAN-SLIM. It's an acronym, and it's for like small cap, mid cap growth stocks, and it works really well. There's a lot of studies out there on CAN-SLIM, but it's different than what I do, although I have elements that I port over to what I do. So I really like this book for technical analysis, but it's a specific methodology that's really designed for specific kind of tickers. So then if you extrapolate it out into other things, you have to recalibrate the way that you apply the technical analysis. So say, for example, they'll talk about expansion in volume. Well, expansion in volume will look different in a small cap mid cap stock as compared to something like volume expansion in an index. So you again have to be a thinking being as you're consuming the information. Now, the one thing I do steer people away from is day trading, technical analysis. And it's not that it's not profitable, like people can do it, but it's probably the most difficult way to go about it and a really low success rate. So that doesn't mean completely axe it off your list forever, but I would not go that route personally. Now, I don't know if there's a book that does like technical analysis, an objective analysis of technical analysis or something like that. I think that would be really cool. Just to walk you through all the different kinds of tools that exist. And here is my solution to that part. I know that this is a long answer, but literally everybody's interested in this stuff. You go to SSRN and then you type in technical analysis. See what pops up. And here you go. So what we can do is actually look at prior research done on the efficacy of technical analysis. And you can come up with different ideas. This is what I would use as like the baseline for understanding things that work. Now, to give I wish I had my drawing thing. It would be really easy to sketch out for you guys. But if I were to summarize at a high level, like what matters for technical analysis, it's pretty simple. I think you need something, you need some understanding of supply and demand and how it's visualized in candles or whatever marking system you prefer. There's different kinds of you can use instead of candlesticks. Candles are really common. I like to use volume profile. That's what these gray bars are in the background. It tells me how frequently the stock transacted at a specific price level for different time frames. This one fixes to the chart. So this is for a 6-month chart in SPY. I use moving averages. The moving averages are ways for me to detect momentum. Then down here, I have 2 different kinds of plots. This is volume average in the background for 2 different periods, 5-day, which is the purple, and then a 20-day, which is about a month, is the gray. And then all of these individual volume bars, notice that there's 2 colors. A lot of times for standard candles, it would be the color of the day. So like this was a green day on the chart, so typically this entire candle would be green. But the way that I coded this is a little different, and it helps me track as a proxy the number of stock buys and the number of stock sales by where they are proximal to the bid ask on the stock itself. So I can see if people are transacting at the bid or at the offer, and that's how I populate this so that I can come up with a percentage breakdown of what was the overall sale or buy volume on the day. That becomes really, really useful for kind of more niche style analysis. Then all of this is just volatility indicators. This is more for the option side of things. And then down here, which is what I think most people should have one version of, notice that I emphasize one. You don't need a bunch of these. More is not better for this. But a oscillator of some sort. So you can use RSI, you can use stochastic, you can use MACD, you can use CCI. The 2 that I use the most are RSI with a moving average and CCI with a moving average. I don't really mess with MACD. I actually like MACD a lot, but I visualize it on the chart because I already have 4 moving averages. So I don't need MACD on top of it. I'm already getting the moving average side of things. And RSI is really high efficacy, so is CCI, just as far as both research that I've come across on SSRN and my own tracking. So, but some sort of oscillator. And then the other thing that you'll see me use are breadth indicators. This is a little bit slow loading. I think it's just because of the Wi-Fi. But this one you can see I use net highs lows here, net highs lows here, and then this is an advanced decline cumulative average with a moving average. It's essentially everything that I have. There's nothing fancy, secret. All of this stuff is pretty basic in nature. It's no proprietary kind of calculation systems or anything like that. It's stuff that's designed to help me visualize what the market is doing, and I'm looking for a few primary themes. And that video that I shared with you earlier will walk you through exactly like the primary themes that I'm looking for. And it's just stuff like severity. I want to look for divergences and stuff like that. So it's actually a great question, especially for this video, again, being more beginner focused. So I'm glad that you asked it. And hopefully the slightly more detailed answer is useful. I'm getting I have like a bunch of pillows behind my back because I'm sitting on a couch. So yeah, and the last thing I would mention when it comes to technical analysis is that it is going to be there will be concepts that apply to everything. And then there will be concepts that are very specific to what the specific products you're looking at are. So just keep that in your mind as you're looking through things. Like, say, for example, something that applies to everything is anomalies. So that's why we use averages for stuff. If I see a massive growth in volume that's anomalous compared to historic averages, 5-day, 20-day averages, it tells me something is going on that's out of the ordinary. What it is, and is it tradable or not? I don't know. but it tells me something is going on. That will apply to anything you look at. Any stock you ever look at, if you see volume spike super fast, something is happening. And again, you might be able to trade it, you might not, but something's going on. That's universal. There will be other things that become more specific to individual style of stocks. So say, for example, things like ATR, which is average true range, or ADR, which is average daily range. Those are a little more specific to the individual tickers that you're talking about, and they become relative to the ticker itself. So there's kind of different levels to it. I would just keep in mind as you're learning that there will be concepts that apply to everything uniformly, and then there will be other concepts that have to be made specific relative to the individual ticker or group of tickers. A lot of times we will use sectors or indices to bucket things together. So that's kind of like a technical analysis crash course, which I actually realize should be our focus topic for today since we're already pretty deep in on it. Let me add this. What other technical analysis stuff do you guys have? Technical analysis crash course. Since we're already on it, 2070s. And then this was for... And then a quick reminder for anybody that's interested in understanding like different stuff we talked about when, you can go through this list. This is on my website, and you can see like if you want to learn about position sizing in a live stream format, I have specific videos about position sizing. But if you want to learn position sizing in a live stream format, you can go check it out on the live stream from 25 November. That's the idea behind this. So Tommy says, what TA do you focus on when accumulating a position to the upside? Fantastic question. So let's answer it the way that I would think about it. And first, it's going to come from overall market overview. Then it's going to come from economic overview, stock market overview, portfolio overview, position. So the reason why I go into that is because the kind of positions that I'm trying to build to answer your specific question, positions to the upside, is going to be relevant for those top two topics specifically: economy, stock market. So say, for example, right now, if I'm looking to build a bullish upside position right now, it is really, really specific because the market itself has already had a baller year. So the probability of it having another massive year is not super high, but that's still, it can always be an exception. It doesn't mean that it can't happen. It absolutely can. But it just means it's less likely to be the case. So all of that being said, that tells me I need to be very specific with what I pick if I'm trying to accumulate to the upside. Then I need to decide, am I trying to accumulate upside via indices or sectors, broad themes, or individual names? That comes from the portfolio level analysis. So right now, I still am bullish on the market. I want to be long SPY deltas. So what I do is decide how much of the portfolio is going to go into that. And then I apply the analysis, which is exactly what we can do. From an index perspective, it's pretty easy because it's essentially the same stuff that I talked to you about when we're overviewing the broad market. So like right now, we're still hovering near highs on a 6-month time frame. Standard deviation channels are still upward sloping. The moving averages are starting to become misaligned, which is not good. I can see volume is slightly expanding. Oscillators are turning down. The RSI is below the oscillator moving average, the RSI moving average, which is the 7-day VWAP. And it's about to cross below the 50 line, which is not good. That's a bad configuration. We had a lower low posted here compared to this, and then we had a lower high posted here compared to this. So that all indicates rotation. So when trying to build a long position from an index perspective, it's essentially this process. Now, the short answer, Tommy, is I use essentially everything that you see on the chart, regardless of what I'm trading. So if I'm trying to trade something to the upside or to the downside, I use all of this stuff. But the configuration of the things is how I analyze, how I build the picture. So again, for example, if I'm trying to trade something to the upside, I need to see standard deviation channel upward sloping relevant to +1 -1 time frame that I'm looking at. +1 -1 time frame essentially means, let's say my expected holding duration is like 3 months. If it's a 90-day expected holding day duration, then I'm going to look at a 3-month chart, a 1-month chart, and a 6-month chart. I'm going to look at one time period up, one time period down, and then the time period I'm analyzing. So 6-month, it's upward sloping, it looks okay. 3-month, still upward sloping, looks okay. And then on a 1-month, upward sloping, but actually starting to fall below some of these standard deviation channels, getting down to the 200 MA, but still upward sloping. So in terms of a standard deviation channel, quote unquote, check, this would pass because all of the standard deviation channels are still upward sloping. Then I do the same thing, essentially for moving averages, both the width between them, the slope of them, and then the configuration of price relative to them. Those are the main things I would look for from there. Volume profile for building a bullish position is actually more used for stops. So let's say that I was trading something like this and it wasn't part of the core allocation. I'm not planning to hold it to the downside. I'm looking for an exit. I'm going to use volume profile both to eyeball where I think near-term resistance might be, which in this case, it'll probably be something like 605.50-ish, and then downside support, which in this case would be like 582. So volume profile for me is actually way more to help me understand where I might manage risk or profits. And it also helps me understand what the market is most likely to do. Because, say, for example, you have something like Bitcoin. And in Bitcoin, as soon as it started cracking above 100,000, you can see all of this massive sale volume started stepping in, tons of sale volume started coming in massive. So what is that? Well, you can see that most of the transactions happened here. So this isn't a bunch of people that are happy to get out at a break-even point. All of these people are making bunches of money. So what it tells me is that it's opportunistic profit taking. That's the bulk of what you see transacting up here. These are people that got in down here at 63K or down here at 443K that are just taking opportunistic profits. Understanding that helps me paint a different picture in terms of what I think about the strength of the downside or the potential for a sell-off. So there's a lot of really, really subtle context that you have to think about when it comes to positioning, whether you're long or short. So, Tommy, to give you now a specific answer, for indices, that's about the path I would take. Lauren says, if it wasn't an index, would you feel the same? Great question. It's actually, Lauren, that you read my mind there, because that's essentially what I was segueing into, is when it transfers to individual positions, because there's a couple steps that get added to the process. The first thing is to look at the parent index and then the parent industry and sector for the individual stocks. So let's say, for example, Walmart. I think Joe mentioned Walmart earlier. And Walmart's been a great trade. You guys know that I was looking and playing this a little bit a while ago, just because it's been super, super strong. And if we see that it's starting to roll over a little bit here, let's say that you got into Walmart here and you're like, okay, I just want to get a sense of how, or let's say actually today, you're contemplating whether or not you want to get into Walmart now. The very first thing I'm going to do is look at the parent index itself. And if you're curious what that is, you can go to fundamentals, and this will tell you that this is in consumer staples. So now what we can do is take a look at how the parent index is doing. And the reason why this matters is because a rising tide lifts all boats, and a falling tide takes them down with it. So the way that I would look at these different, and I'll explain how. So let's say that we think we might be in a trade for like a month, and we can see consumer staples is actually down 3.82%. Consumer staples is not doing well. And if I go to a 6-month time frame, staples is up 4.76, but it's what? Fourth from the bottom. So it's not top performing at all. Yet, if we take a look at Walmart, it is crushing it in this time frame. So what does that tell me? It tells me that Walmart on a relative basis is insanely strong compared to everything else in the relevant sector. So then that can become a trade thesis in and of itself. The raw outperformance of this relative to everything else in its peer group, that is a bolstering factor for Walmart. Now, the other thing to keep in mind is, let's say that we'll take a look at an example and find one. Let's take a look at this, and let's find something that's been going down. I want to show you something. Energy's been going down. This is easy. So now what I'm going to do is take a look for a sector that's been going down. Oh, this is beautiful. So on a 3-month time frame, energy is down 3.61%. On a 1-month time frame, energy was down 10%, big downtick. And on a 5-day time frame, energy is up 2.1%. So here's what I want to do. I want to see what is down the least when the broad sector is down. That indicates relative strength. Then, when we're starting to see a recovery, I want to see what is leading the recovery, which is exactly what I would do here. So I would go into energy and I would take a look at the names and say, what has been outperforming here on these shorter term timeframes? Now, this is the setup that I have here is kind of not built for this style analysis, but what I can do is update this really quick. What I'm going to do is add like a 5-day, because I already have a 1-month period, and let's add a 5-day period. So we'll do percent. 5-day percent. So this will let you visualize how something is doing on a relative basis across multiple time frames, and you'll see why this matters. So let's go back to that view really quick. Sectors. We click into energy. And we have this. So now what I'm going to do is actually sort it by the 5-day change. And I want to see what's leading. So APA and Oxy are leading. Now what I can do is look through these other timeframes and see what's showing better relative performance. And this, for example, looks really interesting to me. TPL is up 56% and 109%, and it's near the top in terms of this 5-day change. So this is a strong performer. This starts to become relative to the time frame I want to change. Which of these becomes more important, these time frames? So, for example, this EQT looks like one of the strongest performers here. The reason why this looks like a really strong performer is because on a 52-week time frame, it's up pretty well. 6-month time frame, it's up pretty well. And then on a 1-month time frame, it's down near the bottom of the group, meaning less than the rest of this thing. And on a 5-day time frame, it's not too far from the top. Now, this would be for a slightly longer term idea, and this is to play the momentum or the drift of it. Now, comparatively, if I wanted to play rebound, I would start looking at these top names and look for stuff that's starting to gain a lot of volume. And like this wouldn't pass the sniff test there. And then Oxy I've looked at a couple times. This meh. Like I don't love it, but if it was a really short-term idea, which is what that 5-day period would be for, then it starts to become more relevant. So one of the things I want you guys to see there as we apply the technical analysis in general is we need to apply it in different time frames that's relevant to the time frame that we think we might want to trade. So that's the idea. What other questions do you guys have about TA? This is actually, I think, hopefully really helpful because TA is one of those things that is definitely part science, part art. There's no debate about it. It takes a while to learn how to match the TA you're applying to the opportunity that you're trying to analyze or search for, because that's the other element to this. Very frequently, when we're trying to put on trades like this, there are two ways to conduct analysis. When I'm conducting analysis here, I'm looking for two starting points. The starting point is either from a scan, trying to search for something, or it's from an evaluation standpoint. I've come across something and I'm trying to evaluate it. So there's two very distinctly different origins for trades and the analysis that I would apply. So you guys see me do a lot of both, really. Come across opportunistic things and come up with ideas, but then also to search for ideas based on set criteria that happens to fit with a portfolio. So yeah, energy, this would not be, but like where I would put money. And the reason is because right now, if I look on a 20-day average, it's bad. 50-day average, it's bad. 100-day average, it's bad. Like it's just bad across the board. But if I wanted to put on a trade in here, for whatever reason, maybe it offsets the portfolio well or whatever the case is. What I go through that exact process I just showed you, and I find names like this, like EQT or KMI. Let's take a look at KMI. This also looks fine. Notice how different this looks compared to the rest of the entire sector. The rest of the entire sector, if we look at those graphs for a comparison, the bulk of the sector looks like this, or this, or this. Right now, we're looking at a 6-month chart. So if you look at a 180-day time frame ish, it's looks like this, right? It looks terrible. But you'll notice that this individual ticker looks completely fine. So this is how you find strength within weakness. As you all know, my general preference is to look for no's, meaning I want to find reasons like, let's say, for example, I was looking for long deltas for the portfolio, and I don't care if I'm in energy. I don't have to be in energy for whatever reason. It doesn't have a portfolio fit. Well, the no for individual trades within energy for me as it sits now, the no is easy. The no is this. The sector writ large doesn't look good. So when the sector writ large doesn't look good, what I do is I find something else. And I want to find other sectors that might be performing better. So let's grab this. So we can see energy, utilities, healthcare, materials on today, 5-day. IT, healthcare. So healthcare, I notice, is up there twice now. Financials, real estate, energy is up there twice now. Let's go to 3-month. I see IT is up there. I see financials. And I see healthcare is actually down towards the bottom here. So I actually see IT being a little more prevalent across all these different time frames, even though on the daily basis, this starts to look like it might be rotating. So what I can do is look for stuff that's hanging around the middle of this graph. And if stuff that's in the middle means it's kind of like a ballast, it's not shooting up a ton, but it's also not plummeting. It's kind of just trending gently sideways. So I want stuff that's positive across various time frames, again, relative to what I'm trying to trade. So industrials, IT, comp services, those are all kind of middle of the pack on a 6-month time frame. 3-month time frame, IT's in here, industrials in here. These are, again, still very middle of the pack. So this is how I would look for what kind of sector I might want to target. And again, it's relative to the time frame. So let's say I wanted to put on a 90-day trade or so. I'm really going to value a 3-month time frame to try to play momentum, maybe 6-month time frame, just because there's a stronger momentum factor in a 6-month period. If I'm playing a really short-term thing, then I care about the 5-day and today the most. Because that's when you're going to catch things it's going through really short-term moves. So it has to be, again, made really relevant to the specific thing you're looking at. Richard says, I have toss, but I can't get volume profile to show up. Is that custom? No, volume profile is not custom here at all. So a lot of people don't know this. Let me find it. So volume profile here, it's just called volume profile. The main thing that you have to change within volume profile to get it to show up like mine does is you have to turn off the expansion. So you see how it says on expansion, no. You need to turn that to no. Because if you have it on expansion as yes, it's going to plop it right over here and it's going to squish the chart, which I don't like. I like it overlaid. So that's literally how you set that up. Pretty simple. And then there's a couple other settings in there to make sure that it's relative to the individual time frame you're on and stuff like that. But I'll probably have to make a video about that at some point because I actually get that question a lot about volume profile. Reese says, just got to the gym. Thanks, Eric. Yeah, enjoy your workout, brother. Benian says, how do you manage risk? That's a great question. I have a bunch of videos on that. That'll probably be better suited. The reason is just because it's a massive, massive answer. The short answer is risk needs to be defined before you enter a trade, and it needs to make sense for the individual trade. That's how. But risk management has to be done in the context of the individual strategy that you're trying to trade, period. So these two videos talk about risk management. At a really high level, if I'm trading a strategy like drift, I'm going to have a specific risk management approach as compared to if I'm trading a strategy like the covered strangle. I'm going to have a different risk management approach. The most important thing when it comes to risk management is that it has to be defined ahead of time before you enter the trade, and it has to be made specific to the strategy. The reason why it has to be made specific to the strategy is because different strategies will have different looks about them. So, say for example, you're trading a breakout strategy, and let's say that you had your entry here. So, for a breakout style strategy, the entire concept is to have really big moves in your favor, that are less frequent, and a bunch of small losing trades. That's the structure, at least for the way that I trade breakouts. So the way that I catch breakouts is I try my hand at a lot of them. And I don't put on really big positions because I'm expecting to get stopped out a lot. Then the way that I make it make sense for the strategy is when I'm right. I do my best to capture as much of the right direction as I possibly can before I get stopped out and then move into something else. So that's an example for breakouts. For something like the covered strangle, risk in the covered strangle is actually managed by size and scaling. So I don't implement stops in a covered strangle. I actually expect to hold things through the downside, which is a great example here at UPRO. If we take a look at UPRO, my basis now I'm pretty sure is underwater because I had gotten stopped out before and then I offered new puts somewhere in here, I want to say. I don't remember the exact day. But we looked at the puts yesterday, I think. Let me tell you what the strikes are. Oh, why is this not going? I have like little hotkeys set up in my trade log. Take me down there. Thank you. So I have the 90s and 88s. Yeah, so I'm deep underwater. So for the 90s and 88s, I'm not taking them down right now. I'm going to manage the short puts. The reason why I'm not taking it down at a stop is because if you all remember the last few live streams that we've talked about this, the position is very lightly allocated. Right now it's 40% utilized. That's it. So I have a ton of capital that I can scale into this trade as it continues to have down moves. And that's the entire nature of the covered strangle as a strategy. So that's to give you an impression on I manage risk in the context of individual strategies. It has to be done in the context of individual strategies. People that say, like, never let a winning trade turn into a loser, it's terrible advice. Or people that say, nobody goes broke taking profits, terrible advice. Or people that say, always book your profits at 50% if you sell options, advice. Because it's so insensitive to the actual structure that you're trying to trade. And yeah, like the way that I do it is more complex. But as I try to remind people, trading is complex. If complexity bothers you, don't fucking trade. It's not the right business for you. But there's two most important elements defined, the time, strategy specific. You can literally transform your trading overnight if every single time before you put on a trade, you select an exit point that you would take the trade off if you're trading directionally or whatever you would do to the downside that's based on whatever the strategy is that you're. The biggest issue people have with managing risk is they don't want to think about it, so they don't. And then when the market starts to turn over, they don't want to realize a loss. So then they let the loss build into something massive. This is called the disposition effect, specifically the loss aversion component. And then now you just have a giant losing trade because you didn't want to think about the uncomfortable part before it happened and you had no plan for it. And then you're kind of freeze locked in your position just watching it, which is, as you probably could imagine, it's a terrible, terrible approach. So that's like a Cliff Notes version of risk management. It's a great question, and by no means am I trying to be obscure or not give you a direct answer. It's a very nuanced topic in order to give a genuine answer, because all of those other genuine approaches, like it literally is complete bullshit. Anybody who says that other stuff, they're oversimplifying it significantly. And that can be the difference between a profitable and a non-profitable approach, straight up. That nuance. So I think it's really important to highlight that nuance for you all. Good question though. What other stuff do you guys have? Anything else specific on technical analysis? It looks like Hooked on Options says I'm super bearish into Feb. Any recommendations on how to position that without blowing up an account? Yeah, I mean, depending on what you're bearish in. So Hooked on Options, are you talking about individual sectors? Are you talking about indices themselves? Are you talking about individual stocks? What are you specifically bearish in? SPX? Okay. So without blowing an account, you can do call spreads, short call spreads, or you can do long puts. Both of those are completely viable. I think either of those would be completely reasonable. It really, and again, the way that you pick between these is exceedingly simple because all you do is run a comparison. So let's say, for example, we're short temperament in SPX, and let's go into the trade tab, and we can look at two different things. We can say maybe we want to sell call spread. So we'll do like a 30 delta and $5 one. You can analyze this. Let's get rid of this. This was a box spread we were modeling. And let's open that up. So here's the profile for the call spread. That's a bearish trade. You'll notice that it's defined risk, but also defined profit. So this might be the configuration, again, depending on what you're expecting to see. And that's why the hypothesis needs to be, again, made specific to what you're expecting to see, because the selection between these would vary based on that. Or we can do something like long puts. These would be really expensive. And we can definitely want to go deeper in the money because the theta on these will be pretty heavy. And then I would probably trade this via ratio put diagonal personally, just to try and limit my theta. So this is a 50. I'm just looking at gross theta per day for the deltas on the 50 delta. This is 40, 39. So I would probably go further out like this. And maybe what's the gamma here? There's like no gamma, so it's too far out. So there's two choices here. Either you have to go further out in time and cough up way more money and go super deep in the money to get the deltas because gamma is so low, or you have to come a little closer in time in order to find your way into at least some sort of gamma. It's just out to a third decimal, I think, so it's out pretty far. Actually, it's not showing gamma on either, so I think there's a calculation error right now on Thinkorswim. Let me come in here to like 33 days. It isn't showing gamma for anything. So it's just miscalculated, because I was going to say there's definitely gamma 83 and 55 days. But let's say we'll just pick one. We'll pick a 50 delta and grab this. So those are the two choices. And the way that they look is completely different. And that's how I back my way into a trade. I make a decision based on what I expect to see happen. Do I expect it to dump a lot? If so, I would rather be long options, cough up the money for it, and have the uncapped profit potential. Now, the downside of doing that in something like SPX is you are overpaying for those puts an egregious amount. Egregious amount. And the reason for that is because the indices and specifically stuff like SPX will be used to hedge broad portfolios. So this is going to be egregiously overpriced. You could also spread this off or something depending on the account size. Then you could look at different widths on a short call spread. So then it comes down to what's the profit mechanism? Do I need something that's going to have uncapped profit potential? The second thing is what fits the portfolio. I want something that would complement the rest of what I have on. And then the actual structures of the trades, what fits best relative to what I think is going to happen. But both of these would disallow a portfolio from blowing up because this one's defined risk and so is this one. This one is defined at whatever you buy it for. And if this is too expensive, the 15,600, you can spread this off too. So that this way you would have capped profit, but you can make it nice and wide so that the max risk is something that's palatable for the size of the trade that you want to put. So two different ways, both pretty simple, both relative to what you're trying to put on in terms of like what you want to see. Next one we have is from Marcus that says, can we look at NVIDIA? Sure. Anything in particular that you look at? Or just a general overview? Interesting. So for NVIDIA, interesting. I mean, it's posting lower highs and it's definitely rotating over. I'm still bullish in NVIDIA. There's actually a ratio called diagonal, but that's further out in time. The longs on that are 20 June 25. So they're a bit further out in time. But this either looks like a pretty wide consolidation channel that's being built, or this looks like the start of a rotation. But it still is positive sloping 200-day, which I like. The short-term moving averages don't look good. From a oscillator standpoint, it doesn't look great. Let's see what the dealio is in here. Even calls to puts. The put skew, which is pretty standard. Yeah. So overall, NVIDIA just looks like it's in a bit of a consolidation. That's what I see here. It does look like bearish tilt because I see lower highs and lower lows. So depending on how this behaves will be really important. If it starts to rally back up, in challenging what we see here, or if it happens to roll back over and drop below these. So that's what I'm seeing here. Benian says, what do you think about today's close on GME? I'm actually about to do a video about GME specifically. So you will have a video at your doorstep in a few minutes once I wrap this up. But I don't know about a stream tomorrow, potentially. And for those that don't know, I think I'm pivoting the video releases. Let me see. When am I doing these? Need a calendar. So I have the video releases starting to come out on Sunday. So there'll be the 29th, the 5th, the 12th, the 18th, or the 19th. That's what I have built out so far for you. So slight change just in terms of production. I don't think there's actually any impact to anybody, but just so you know when you can expect like my weekly video, the main video, it'll be out then. So that's what's going on. And then not next week, but the week after, we'll be back to standard time frame, standard content schedule and all that stuff. So standard live streams and all that. And then if you guys wanted to see a couple, I think I have a couple drone photos I can show you from yesterday. Yesterday was pretty cool. Uh, Here, let me see. Is that the right one? No, that's not the right one. Hold on. Yesterday, the 25th. Here we go. Here we go. Here's yesterday. Open this in Focus. There you go. Couple drone shots for you. Hey, everybody, shout out to I'd Rather Be Skiing. One, for hooking you guys up with a membership, and then also that obviously helps the channel out, especially because I don't run ads. I figured out how to turn them off on the live streams for you guys. So helps me a lot. Thank you. It's very generous of you. Thank you very much. So there's this one. Let's click through some of these. This was a really cool spot. Yeah, there was just a ton to see here. And then I don't know if you guys can tell, but this is actually a glacier, like that deep blue color. That's all a massive glacier. And then this was just kind of running through some trees. This was another glacier. So the drone videos or the drone footage that I took today, you guys are gonna you're gonna lose it because this we stopped by this yesterday on the way up to Jasper, and it was like this, completely cloudy. You couldn't even really see the mountains. This is actually a glacier up here too. But today on the way back down here, right now we're at Lake Louise. On the way back down here, it was completely clear. So the drone footage that I was able to get today is just absolutely gorgeous. So there's us, nice and cold. Yeah, so you can see some of the glacier actually peeking out here, like that deep, deep blue, which is always super sick to me. And then I'll show you one other piece. This was like this really cool waterfall that was dumping out, that's coming down from the glacier. So I thought these were pretty sick. Lauren says it looks cold. The temperature is actually quite beautiful. The main thing, though, is that it definitely is windy, and the wind is the part that'll get you, I think, because the temperature itself is pretty decent. It's like 20s, 30s overall. I think it's okay. But yeah, this was another really cool spot that we came across with like this waterfall setup. This was like this big overpass that we saw, and then this was another waterfall that we came across. Yo, I'd rather be skiing. That's so kind of you. Thank you very much for doing that for another 5 people. That's rad. Thank you very. Hey, there's a dude named Eric G, spelled the same as me. Thank you very much. Shout out to I'd rather be skiing. This was another waterfall, but you can like the color of the water here is next level, just mind blowing. This super super deep blue that is all directly from glacier runoff, which I just think is pretty sick. And then this was another lake that we went out and just walked around on, which is pretty cool. And I think that's most of it. Yeah, those are most of the pictures from yesterday. Oh, there's a couple actually in here that are cool. I like this one a lot. So this was literally just the side of the mountain that we were driving alongside. So you can see the road down here. This is the road. But this mountain, I don't know why. The coloration on that mountain, I just think is absolutely stunning. Really, really cool. So far, really enjoying it. As you can tell, I love flying the drone and just capturing this kind of stuff. One, to share it with you all. I think it's fun to, especially people like my mom, because she doesn't really like to travel like I do. So she's able to live vicariously through me, and I love being able to do this stuff for her so that she can take a look. And I just package it all together in like a big drone video with a photo shoot. So yeah, super super fun. I will have more drone footage and stuff. We'll probably be able to do something tomorrow. I just don't know if where we're going to be has Wi-Fi and or if it has cell service. So if it does, happy to do a stream. I probably won't do the GME stream just because I don't have this set up to be able to go through everything the way I would want to. Because we're going through all of like pretty deep stuff. I need my full computer for that. But we can do a general live stream or something like that. We'll see what it looks like. So I'm gonna hop over, work on the GME recap video because it's expiration day, and then this standard video will be out on Sunday. So the newsletter this week will also be out. I have to write that for you all. And as always, if you need anything, hit me up. Be an outlier. See you guys later.